Good afternoon, everybody. Would like to welcome you to the town hall meeting scheduled for this afternoon, February 21st. As most of you hopefully know, if not, my name is Mike Escugin, your general manager. Pleased to be your general manager, and I would like to introduce Mr. Jim Annis for tonight's and this afternoon's presentation.
Thank you, Mike. For those of you who don't know me, my name is Jim Annis. It's A-N-N-I-S. 2 N's makes the A short. And I'm very proud to be president of the Hidden Valley Board of Directors. As I became a board member last year, the question I was asked most frequently by members was, and I'll quote, "How is the club doing financially? We don't know," unquote. This concern, coupled with directives from our strategic plan of 2019 to communicate more openly and transparently with members about our financials, are the reasons for this meeting today. So on behalf of the board of directors, I would like to welcome you to the first town hall of 2021 entitled Club Finances and the Renaissance Plan. This afternoon, we will review the club dashboard template that all members were sent on February 2nd, and then we'll look at the specific experience of our club relative to the dashboard over the past 5 years. We will then discuss conclusions from the dashboard and introduce the Club Renaissance Plan, a plan within the strategic plan. After that, questions will be answered. I'm sure we've all been involved in Zoom meetings that are not as well run as possible. So let's establish these Zoom meeting clubhouse rules, if you will. Please do not unmute your computer. We don't want to hear your phone ring or your dog bark. All questions can be asked through the chat button. We will not be entertaining verbal questions because it's just too difficult in this forum. But the chat feature, please ask any questions. We'll address those at the end of the meeting. As Mike mentioned, this meeting is being recorded and that will be posted to the website when the meeting is done. And we think the presentation will take about 30 minutes, depending on how long-winded and excited I get. The pig gets fat and the hog gets butchered. There are several business expressions that are pertinent to this presentation. In my career, I've run businesses in several different industries, and this saying, the pig gets fat and the hog gets butchered, was always my pricing philosophy because it speaks to value. We were never the low price offering because we knew we were offering superior customer service. So we priced our services fairly and did not get greedy. We never became the hog. The way you eat an elephant is one bite at a time. This is a very common expression everyone knows, and it's very relevant to our club and discussion today. Stress is the difference between expectations and reality. I love this expression, not only in business, but in life. If you manage expectations, and your life will be much less stressful. So stress is the difference between expectations and reality. And finally, if you don't know where you're going, how do you know if you got there? This obviously is a variation of the Cheshire Cat's expression in Alice in Wonderland. This expression speaks directly to the Renaissance Plan being introduced today. So now on to the dashboard template. An organization called Club Benchmarking accumulates values from over 1,000 country clubs of all types and sizes across the country. The intent of these indicators is to clearly identify measures that directly correlate to financial health and stability. The median is the mid value for all the clubs in the comparison set. The integers are really for reference only. It is the percentage calculations that really matter. We added the green, yellow, and red colors as an easy way to note successes and to note areas of concern. Red colored areas need improvement. The board has adopted this dashboard as a way to regularly inform members about our financial condition. The first 3 sections, operating financial KPIs, operational KPIs, and membership KPIs, deal with the operating ledger key performance indicators. The operating ledger is the vehicle for delivering services and amenities to the members. Let me repeat that. The operating ledger is the vehicle for delivering services and amenities to the members. It is consumed every year by members enjoying the club. The operating ledger should break even every year. Starting at the top, if Mike could bring up the pointer, starting at the top, operating revenue is derived from income. There we go. Income derived from all operating sources, even though all sources do not have the same margin. Membership dues carry the highest margin, followed by Monday tournaments and properly priced catering events, and then finally food and beverage and pro shop revenue. The best way to raise this number is by getting new members. New members is the lifeblood of the business. The worst way to increase operating revenue is to have a bunch of poor performing catering events. The membership dues ratio, the next line down, is important because it makes sure that the amount from the, Mike, we're on the wrong, we need to go back to. There we go. The membership dues ratio is important because it makes sure that the amount from the higher margin member dues is appropriate. Gross profit asks how much money is available to cover our expenses. The next line down, the gross margin of a club is calculated as gross profit divided by the club's operating revenue. It will indicate that the mix of revenue is spot on. Clubs with a low gross margin typically have too much low margin food and beverage business. When the fixed expense ratio and the gross margin are equal, the club's operating ledger breaks even, which is what the goal is. The net operating goal is $0. Do operations draw from capital or do they produce money for capital? The payroll ratio under operational KPIs is a key ratio as three critical parameters intersect in this ratio: operating financial results, operating efficiency, and member satisfaction. Don't forget, stress is the difference between expectations and reality. Net food and beverage to gross profit ratio monitors the impact of food and beverage on the operation. Food and beverage in a country club is considered an amenity, but it also needs to be monitored. This calculation does that. Full member dues, down a couple lines, under membership KPIs, is the only whole integer that really matters, as it tells how our full membership dues compare to the average membership dues across the country. And then finally, we have full member turnover percentage. Is important for obvious reason. It's kind of like a business who spends all of their energy in getting new business and forgets about their existing base of business. A well-managed club will pay special attention to the existing members of all generations. So these are the operating ledger KPIs. Let's see how our club, Hidden Valley, does on the operating ledger side of things. So if we look at starting at the top, at the top columns, left to right, we see the years 2016, 2017, 2018, 2019, and then we have two 2020 years. We have the left column is our operating result without the PPP loan we got through the COVID relief of last year, and the right 2020 column is the financial result with the PPP loan. To refresh your memory, that PPP loan was $431,600. And we've been assured by the bank that that loan has been fully forgiven and with no other costs. So this is very good news. Let me repeat that. The PPP loan will be fully forgiven with no other costs. Very good news. The 20, and then the right hand numbers are the club benchmarking columns. Now, the 2020 numbers need to be looked at a little scant for obvious reasons because of the year that it was, but we still need to include it in this analysis. Beginning with operating revenue, the first line, you'll see that we had a decline in 2017 from 2016. Then we had another decline from 2018 compared to 2017. And in fact, we rebounded significantly in 2019. And that rebound was a direct result of our current general manager's sales efforts. For the first time in recent memory, we have a GM who's also a sales guy. That's good news. The no PPP 2020 was down, but that's expected for obvious reasons. The next line down, our membership dues ratio, is the first indication that we have a healthy membership dues engine. If you'll notice, the percentages there are steady across the board. It went up a little bit in 2020, only because of the circumstances of that year. But still, green is a good thing. So membership dues ratio is excellent. Our gross margin is all yellow and green, which is a good indication, and also a second indication of a good membership dues engine. And what this means is that our food and beverage historically is not taking up too much of the gross margin. We encounter the first red in the fixed expense ratio of 2018, 2019, and 2020. And you'll see that right there where Mike just put the pointer. Now, it went red those years, and it's no mistake if you go down to the payroll ratio below that, you'll see that the payroll ratio went red at the exact same time. This is not a coincidence. As payroll went up, so does fixed expenses. An adjustment in payroll would render most of these boxes yellow. Our administrative payroll in those years was top heavy. And that has been solved with the exit of our general manager and a replacement while not replacing the director of sales. And that position will not be replaced. So we've made the appropriate adjustments on the top and heavy administrative payroll. I owned a staffing, executive search, and HR outsourcing company for 25 years. And I can tell you unequivocally that our administrative team is currently right-sized and paid at market rates, not exorbitant. It is now the general manager's responsibility to balance the remaining service payroll with acceptable levels of service to the members to arrive at a net operating result of break even. So this redness has been taken care of. If we go up one to the net operating result, you'll see that we were yellow in 16 and 17, and we went seriously red in 18, 19, and no PPP 20. What's interesting about this is we made money in 16 and 17 as our revenue was going down. When that happens, what that means is that we're making money by cutting back costs, which does not yield for a positive experience for the members. And the decision was made to change that and try to grow out of the experience. We tried to do that last couple of years and it just didn't work. So what we're seeing now is adjustments properly made there to get an operating result of break even. The third indication of a strong membership dues engine is shown at the full member dues. Second from the bottom. Ours is $554 right now versus $575 on a national average. And then finally, our turnover went yellow last year. With a membership as senior as we have, turnover is predictably a challenge. This change to yellow in 2020 indicates that our offering is very good and that our membership is getting younger. As a matter of fact, our average member age declined by 3.2% this past year. Good news. So the summary of operating ledger by the board is good to very good, as we have identified the payroll challenge. It would not be out of line to ask me, how can I say that the operating ledger is good when for 3 years we have shown significant losses? My answer would be that that is history and the problems have been identified and solutions are in process. I can also tell you that we have $175,000 in signed contracts for very good catering events at good margin and $150,000 in golf tournaments already signed up for this year once COVID restrictions relax. Finally, I can tell you that in the last 6 months, July through December, our net operating result is positive after backing out the exited general manager's payroll costs. So it's good stuff, good positive stuff. The strategy by the board is to continue having a strong membership dues engine and operating ledger. Now on to capital. The fourth section here deals with capital generation KPIs and then debt KPIs. Capital revenue is the key to a club's overall success. Capital revenue allows the club to pay for needed repairs and replacements. It also enables the club to reinvest in desired aspirational projects. Let me repeat that. Capital revenue is the key to a club's overall success. Capital revenue allows the club to pay for needed repairs and replacements. It also enables the club to reinvest in desired aspirational projects. So what we have here on the dashboard is we have first line is total capital income, otherwise known as the capital engine. And this is income derived from all of our capital sources: initiation fees, capital dues or assessments, sale of property, sale of water rights, and operating surplus. The next line is the net available capital, and this is ultimately more important than total capital income. It is the amount of capital available after factoring in the net operating result and lease payments. Operating deficits can draw money away from capital income, thereby decreasing net available capital. Net available capital ratio is the net available capital divided by the club's operating revenue. Pretty simple formula. 11% is the magic mid number, 11%. Remember that number, 11%. Net worth over time is just what it says. This is calculated by measuring change in the net worth or members' equity on the balance sheet over time. This is a mission critical endeavor for the enduring success of any organization. And finally, net to gross PPE or property, plant, and equipment indicates in what condition our club's assets are. The higher the ratio, the fresher the club's assets, because there's been investments in improving those assets. And the lower the ratio, the more fully depreciated and worn the assets are. The fifth section deals with debt key performance indicators, and Hidden Valley has no long-term debt. So that's going to be all green and does not need any more discussion. So the real question is, how do we do in section 4? Go back to the next screen, Mike. We have the same headers, 16, 17, 18, 19, and 20. And if you'll notice, we have a lot of red. So obviously, we have a capital problem. Let's take a look at it. There was significant capital growth, income growth in 2019 and 2020. And this does not include the $247,500 that we are still owed for the cell tower. We expect to receive that money later on this month. Initiation fees and water rights sales were significant in 2019 and 2020. If you look at the net available capital, it's well below any acceptable range. The net worth over time has decreased by 24% in the last 5 years. This is unacceptable because this means that we're basically eating or consuming ourselves. And this has got to change. The net to gross PPE, is half of what it should be. It goes down from 28 to 26 to down to 23, and it should be about 50. And so the club obviously needs to emphasize and take a hard look at capital and how do we manage this. And so this is time now to introduce what we call the Renaissance Plan as part of this strategic plan, being reminded that the way you eat an elephant is one bite at a time. Renaissance Plan and capital. The challenge is that currently we have $192,000 per year in lease payments and just over $200,000 in annual depreciation costs, for a total of about $400,000 in annual capital costs. If there is a deficit in the operating ledger, that deficit is made up out of either cash, member assessments, or contributions from the capital ledger. In the past, there's been earmarked a certain percentage of membership dues to be applied to the capital ledger. Prior to 2000, that number was 6%. Most recently, that number has been 2%. The problem with this approach is that when an enterprise is operating at a deficit, that percentage contribution to capital will not be made because that makes the operating deficit look even worse. This damages the long-term interest of the club, as it is through capital contributions that the club's offerings remain fresh and vibrant. The solution decided by the board is to establish a separate freestanding capital dues paid by all members, making sure that the combination of capital and membership dues do not drive members away. In other words, we don't want to be the hog. Starting April 1st of this year, all golfing memberships, proprietary, junior executive, legacy, any promotional golf memberships will pay a $25 a month in capital dues. Let me repeat that. Starting April 1st of this year, all golfing memberships, proprietary, junior executive, legacy, and any promotional golf memberships will pay $25 a month in capital dues. All social members will pay 25% of the golfing membership capital dues. In this case, $625 a month. Your invoice will read capital dues. With this, all members participate. Also, there will be no golfing membership dues increases until at least April 22nd, April of 2022, excuse me. Let me repeat that. There will be no golfing membership dues increases until April of 2022. Social members will see their membership dues go up $10 a month in April of this year. In year 2022, the capital dues will go up $10 a month to $35 a month. And then in April of 2023, it will go up $10 a month to $45 per month in April of 2023. Likewise, the social memberships will go up to $875 a month for capital dues in 22 and $11.25 a month in April of 2023. With this plan, after the first year, the capital dues plus minimum initiation fees will cover our lease payments. Year 2 will see our lease payments covered and some additional capital for projects. Finally, for year 3, the capital income will be very close to covering our ongoing capital requirements. It is the non-lease payment other capital that can be used to enlarge our patio area or build a member activity area by the putting green or other aspirational projects. Also, please remember that the trajectory can be changed with more members. I can't emphasize how important new members are to this equation and to keeping all dues down. Membership is so important that will be the topic of our next town hall in June. The question might arise, what happens if we have significant sales of excess water rights? And that's a good question. The reality is that the club, obviously with all that red in 2 slides previous, is very far behind on many general maintenance projects that have been delayed, such as rooftop projects and parking lot resurfacing. The revenue from any sizable water rights sale will help us get caught up on some of these projects. However, the reality is that the club still needs to establish a long-term capital dues engine, because at some point in time, probably 4 or 5 years down the road, that water rights sales money will be spent and we'll be right back where we started with no capital dues engine if we don't do this today. By the end of this year, we will have completed a revised capital reserve study for estimated capital improvements over a period of 20 years. At that point, we'll be better able to refine our approach. Now on, and let me also caution that all the redness in the capital dues dashboard, it'll take a little while for some of that red to become yellow from a capital dues standpoint. As I said earlier, we eat an elephant one bite at a time. And so that's the process on the capital dues. Now on to the Renaissance plan and membership dues. This spreadsheet is an analysis of our membership dues for the past 20 years. In 2001, our membership dues were $310. And today our membership dues are $554 at the bottom of that left column, as you see. As you can see on this chart, if we had increased our dues annually at 3% starting in 2001, our current membership dues would be $560 per month, only $6 per month above our current dues. So we just ask you to remember that 3% number. If you don't know where you're going, how do you know when you get there? As stated on the earlier slide, social memberships will go up $10 per month this year. Membership dues will go up $10 per month this year, effective April 1st of 2021. Other members will not see a membership dues increase until next year. And next year, we expect that all memberships will see an increase of 3%. That can change if we get a whole bunch of new members. But for planning purposes, it might make sense to know that that's probably going to be the number. It might be lower. We don't expect it to be higher. This will be the first golfing membership dues increase since July of 2019, over 2.5 years. The year after that, the increase will be anywhere between 0 and 3% for membership dues, predicated on several things, paramount of which is how many members we have. Don't forget, the trajectory can be changed most dramatically with more members. It's good policy to have a process whereby annual dues increases can be evaluated and shared with the membership. The club dashboard provides us with that capability. We now know what the metrics have to be to have a financially stable club and to managing service expectations. Bylaws require that the membership be informed 30 days in advance of any dues increase. The board will be voting this Thursday night on only the 2021 dues policy, which means the implementation of the capital dues plan as described and the $10 per month of membership dues increase for social members only. But the board felt that it's helpful for all members to have an idea of what is happening in the future, at least some indication, and thus the Renaissance plan. Let me repeat, Mike, go back to the other screen, please. Thank you. Let me repeat that the bylaws require that the membership be informed 30 days in advance of any dues increase. The board will be voting this Thursday and the memo will be going out on Friday. And again, we're voting just on the April 1, 2021 through March 31, 2022 dues increases. The board next year can examine the Renaissance plan and with the membership determine what the proper evaluation is on member dues. Next slide. Stress is the difference between expectations and reality. So what this screen is showing us, it's showing us the membership, the worst case scenario for dues increases over the next 3 years. April 1 of this year, 2021, no member on golfing memberships, no membership increase, a capital dues increase of $25. Next year, 3% of $554 is $17. Capital dues will go up another $10 for a $27 increase. And again, worst case in 2023, if it was 3%, we don't think it needs to be, but if it was, that'd be $28. Social memberships, this year we'll see a $16.25 increase, $6.50 worst case in 2022, and $7.50 monthly increase in 2023. It's difficult to project more than 3 years. Please remember that all of these numbers change dramatically if we have more members, if you hold events at the club, if you buy from the pro shop, if you refer tournaments to us. All of these operational income items can help change the trajectory of this plan. The only caveat that needs mentioning is very high inflation. You know, we don't have a crystal ball, but we do write our plans in pencil, and high inflation could impact this plan, but we continue to hope for the best. So in summary, the Renaissance plan is part of the strategic plan. The board has decided to use the club dashboard to implement the club dashboard as a way of sharing finances with members that is easy and can be up to date. The board and the finance committee take a great custodial attitude of dues paid by the members. We value every dollar, and we're doing everything we can to make sure that you get value out of each and every dollar that you're spending at the club. We have a variable 3-year membership dues plan. We've established a capital dues plan, which in the long run will really help the organization, where all members are participating, and we will have a completed capital reserve study by the year end, by the end of this year, excuse me. And I think the club has a renewed energy and future. There's a lot of activity going on. I come back once a month, check things out, and the operation seems excellent. So that's the presentation of the Renaissance plan, and now I'm open for questions. Okay, so we have only one question, which means I did a great job. Is there only one question, Mike?
I see just this one question.
Great, thank you. That means either people fell asleep or they only have one question.
You were very clear. Good
Be happy
job
to
so
answer any
far.
question. The question was, when will water rights be sold? What is the delay? I'm assuming that there's been an opportunity to sell maybe a large chunk of those water rights, and we are in constant communication with the parties at hand. And you know, it's a big purchase, and I can't tell you what the delay is, other than we're in communication with them. Question of what do we pay lease payments on? The golf carts, and primarily, I believe, correct me if I'm wrong, Mike or Butch or Jennifer or Mike, but primarily golf carts and course maintenance equipment.
That's exactly correct.
Okay, great. So I said it'd be half hour. It's 4:32. We started at 4:04, so it's 28 minutes. I want to thank everybody for attending and participating, and please refer people to the club. We want to get the membership up. That would just solve so many more problems, and I think it would be great. So another question here: what is the delay in getting the cell tower payment? That issue, as we speak, is now being escalated. We've gotten 3 different reasons why: delays, end of the year, COVID, and now we're putting a little energy and escalating that and finding out why. So I can't tell you exactly why, but that's at the top of the list. All right. So everyone, thank you so much for attending. Any questions? Feel free to give me a call or email me. Mike, thank you for arranging this, and the floor is yours.
Thank you, Jim. Today was an exciting day at the club. We just really want to thank everybody for attending this session. We wanted to make sure everybody was aware of what we were going to do immediately this spring, what we're going to be voting on next week. And again, thank you for the time. That's all I have to say. Thank you, Jim. That was a wonderful presentation. And again, thank you for all who participated. I'll see you here at the club soon.
Thanks, Scooch. We'll see you, buddy.
You too, Butch. Bye, everybody.
Thank you, Scooch. Thank you, everybody. What a great presentation.
Thank you all. It means a lot that you were here. Appreciate it.